Let's talk about tax reform. We were talking about giving the past several weeks leading into this new year. The tax reform bill was a hot topic in the news. We're going to break this down into two segments. We'll talk about individuals today, and then next week, if you join us on the show, we'll get into more about how this affects businesses. But when it comes to tax reform, individuals, I'm just going to ask you this question because it's a question I think a lot of people have when it comes to this bill. Did my taxes go up or did they go down? I'm hearing both things on Facebook and online. What's the answer?
Depends.
That doesn't clear it up.
Well, before we even get into that, I want to just clarify to listeners that it's really hard to make this exciting. I mean, I love talking about life and money and how do our financial assets impact our lives. That's exciting. That's fun. But the reality of it is there's a lot of things that we have to know and understand on our end to be better advisors. And the tax bill is one of those things. We have to understand it, know kind of those big changes. And I think for most individuals, I can tell you, well, not most of them, I know that the tax rates went down. Okay, so they went down. Now, whether or not you pay more tax or not, that has yet to be seen, and that depends on your situation. I think most people will pay less, but it's not as simple as you will pay yet less or more.
Right.
And before we get too much deeper again, we do not prepare taxes here. I cannot give tax advice. I cannot give legal advice. But what I want to do is come alongside our clients and show them how do their investments, how do their retirement accounts, how does these decisions they make coming into retirement impact their taxes, and the tax bill has a lot to do with that. Okay. So let's continue.
You talked about number of brackets.
Yep.
Okay. Now that didn't change, but the numbers inside the brackets changed. Can you explain that?
They did. Okay. So in the past we had a 10%, 15, 25, 28, 33, 35, and 39.6. So those were all the rates, okay? Now we've got a 10% bracket. That's the same. But we also introduced a 12, a 22, 24, 32, and 35, and 37. So most of them went down by 1% or 2.
Sure.
I think a lot of individuals are going to see at least a 3% savings because a lot of people fall in that 15% tax bracket. And now it's going down to 12%. A lot of people fall in the 25% tax bracket. That one dropped to 22. Sure. So we look at these brackets, they did drop, and I think that's a beneficial thing.
No, dumb question. This is federal tax. This has nothing to do with Minnesota state income tax.
Minnesota made no changes. It's all federal tax bill.
Okay, gotcha.
Yep.
You talked about a big change when it comes to itemized deductions. Talk about that.
I think it's going to directly affect how many people itemize deductions with this change.
Why?
Well, in the past, so last year, we had an itemized deduction. We're going to talk married filing joint today, okay? Yep. Married filing joint had an itemized deduction.
Standard deduction.
Or excuse me, standard deduction of $13,000.
And that was, so no matter what you did,
didn't matter.
You can write that off, and most people generally perhaps take advantage of that.
Yeah.
Okay.
Of their standard deduction.
Yep.
It was $13,000. This current year under the new tax act is $24,000.
Which
is a huge increase.
Which is good.
It is good.
Right.
But there's a little caveat there. Personal exemptions changed. So we used to be able to have a $4,050 personal exemption, which benefited individuals. Now those were removed.
Okay.
But child tax credit went from $1,000 to $2,000. And there's income phase outs to all this stuff. And we're getting way too down in the nitty gritty here.
Yeah.
But I think the combination of that, really the standard deduction and what we're talking about there versus itemizing, I think less people will end up itemizing with this new tax bill because it's a big, big dollar amount. And probably bigger than that was the change, which was a big deal for people, especially in Minnesota, that instead of being able to deduct or on their itemized deductions, one of the big items, I'd break it down to 3 things: mortgage interest, state and local taxes, and charitable contributions. State and local taxes on this tax bill are limited to $10,000. That means those other 2 items, mortgage interest and charitable contributions, have to be over 14. Again, married filing joint, in order for you to itemize and take advantage of that.
Right.
I just don't think a lot of people will get there.
Gotcha. Let's just take the standard deduction, and that will be it.
Yeah.
We kind of talked even off the record. This might affect a lot of people in their giving. A lot of charities are a little concerned about this because people standard deduction is so high that they have to give more than maybe what they can to get there, so
to get the benefit.
So they won't.
Yeah, they might not benefit on their taxes. Now, that's a broad statement,
and that's a
ton of people. And really,
yeah.
we can get into why people give, and is it tax deduction, is it not? I think it impacts people a little bit, but I certainly wouldn't say no longer are these things deductible. It's just if you don't give larger amounts, you just might not itemize.
Yeah.
That's not why I give.
Right.
I don't give because I want to get a tax deduction. I give because I enjoy it and because I'm called to give. So, but again, we might see some of that.
Interesting.
And yeah, there's more to come.
Last thing you talked about was the estate tax. Talk about that.
Well, it doubled. Federal, the number basically doubled. So we went from 11.2 to 22.4 for individuals, which is huge.
What's that mean?
It just means that now you can be very, very wealthy and not pay much in the way of federal estate tax. And twice as much you can pass on to the next generation. Now, we're still kind of stuck with this whole Minnesota tax thing, which didn't change. And that's one of the problems with even when we talked about the itemized deduction stuff we just talked about, is Minnesota's a high income tax state. We just are. And that's a little scary for me. We saw clients a few years ago start to talk about, am I better off leaving the state because of these taxes? Well, Minnesota still has an estate tax as well.
Right.
So like it or not, that's what we're in, and that's what we got to plan around.
Gotcha. What can people do here as we wrap up the show here? What, people out there listening right now have more questions. Again, we're making kind of general assumptions. It's hard to really get specific as to how this affects people directly. What's your advice to people?
I think talk to a professional. So if you need tax legal advice, talk to your CPA, talk to your attorney. If you need somebody to summarize some of these things for you and work with your investments and your retirement accounts about how they're going to impact you individually, please talk to us. Give us a call. We'd like to walk through that with you and give you some education. One of the things that Dave Ramsey's always talking about is we have to have a heart of a teacher. That's what I hope to do, is teach our clients how will these things impact them down the road. And there's so much more to this tax bill that we couldn't even touch on today. But, again, find that trusted advisor. We'd love to chat with you, give you more in-depth coaching and teaching on really what's changing.
You got any questions out there, please give us a call. Ben, thanks so much for your expertise. Our number is 222-4236. You want to look us up online, please do so. Our website is taatjesfinancial.com. My name is Jerrid Sebesta. Thank you so much for listening to this True Wealth Radio segment. Happy New Year, and we'll talk about tax reform when it comes to businesses next week on the show. We'll see you then.
If you'd like to set up a no-cost meeting with Taatjes Financial Group, call 222-4236 or stop by their office on 19th Avenue Southwest in Wilmer. And you can always check them out online, taatjesfinancial.com. Taatjes Financial Group, inspiring true wealth.
Securities offered through HD Vest Investment Services, member SIPC. Advisory services are offered through HD Vest Advisory Services. Taatjes Financial Group is not a registered broker-dealer or registered investment advisory firm.